Europe's largest oil company, Royal Dutch Shell, said third quarter net income fell 73% as falling oil and gas prices plus refining margins hit home. Shell's chief executive officer, Peter Voser, also warned of slow recovery, excluding charges and inventory charges. Shell said third quarter earnings was $2.99 billion. That was ahead of an average forecast of $2.5 billion. And for more on Shell, we're speaking with Reuters energy correspondent Tom Bergen in London. Hey Tom, good afternoon. Shell CEO Peter Voser's remarks about recovery and demand, as well as pricing, does not paint a particularly good picture for Shell, and in particular big oil. What do experts believe when it comes to the pricing recovery? When might that happen?
In terms of when the recovery will come, it's a sort of a three-pronged question, really. First of all is crude. The crude prices have already started to recover, or are expected to do so if the economy continues to recover. So we're seeing some improvement there on that already. That improvement should continue to feed through into the balance sheets over the next year or so. In other areas it's not so clear. Big oil companies like Shell, much of their production, probably 40–50%, is actually of natural gas. Now the outlook for natural gas is a lot weaker. It's really uncertain whether we're going to see a significant recovery of prices there for 12 or 18 months, according to a lot of executives that we've been speaking to. And the final piece of the puzzle, of course, is refining. All these big companies like Shell, Exxon and BP, they also process a lot of crude and make it, converting it into products that we actually use, like gasoline. Now, that business has been very weak in recent quarters.